Hello everyone, happy holiday. This is Sam Wong again. Today is Sunday, December 28th. Hope market has recently been running on sideways, meaning that many high-tech companies came down, as you have seen it from Apple, Nvidia, Microsoft, Netflix, Tesla. Due to standard cost rally, however, most of the stock rebound in S&P 500 has reached intraday 52-week highs, and you can see the Nasdaq. We going back to April when Trump had launched the tariffs discussions. The stock have been really in very dramatic fear, right? And so the stock been coming down, and then when you say renegotiation and things wasn't as bad. The market have gone the other way and really significant rebound. And over a year now, you look back, yeah, sure, we really reaching the high and really Nasdaq have 21% return, and we still have few more day to go. So hopefully the market will continue to some momentum driving the finishing strong in 2025. And you can see S&P 500. Basically, you can look at the same perspective. April was the day that was really fear. If you have buy that, which for those who listen to my video, I say to buy, and you now hold till end of the year, when your return is doing pretty well, and you actually in the day whether you had a little dip after, basically anticipation of lower interest rate quarter points basis, the market actually reacted. What happened was a lot of time it really market Wall Street which really forward looking. So at the time we're talking about potentially interest rate drop, the market actually push and the momentum going up. When the announcement actually, really materialized in reality, then the stock actually kind of going lower. So then, with the center cost rally, you see the actual S&P 500 had did pretty well and gone back up and really trying the new level high, which is 69.45. So I would like to go also cover some of the stock that I talked about. So and then many analysts are still remain very bullish on outlook 2026, and we'll go over some couple of the stock that how they saying, what they thinking the expected price going to be and how next year can look. So for those who listen to my video, it's a little bit sluggish right now, robots, because they're getting a lawsuit. So you can see the stock, a couple years ago, and I always have been saying buying it. It was at the $40, and it dropped. I sold about 80 some dollars a lot, and then I buy back again, and then push up to 100, make a little more money, and the market actually pushing the stock as high as $150, 52 way high, as you see. Well, then the things are not going well, and started really slipping after in October and continue to slide. And I actually recommend buying a little bit, below $100, and then now it's $80, which is really quite a good buy. However, you have to pay attention that the 52-week low is $50.10. So I actually losing some money right now, but I'm anticipating the stock probably will bounce back at one point $100, and this is still a stock that I would recommend. I think good to hold for long run, and hopefully, there's some gaming company will be interested to buy them out, and then the stock will be going pretty good. And during COVID, again, the stock have gone up to $175 a share. So right now it's really like, again, it's like this kind of 50% off the record high. The next stock we'll talk about is Helium. So I recommend people to buy again around the dip about $100.76 for the last video you heard about from me. So you actually will have made quite a bit of money, 10% within a month. This stock is quite volatile, but again, in the long run, I look at a very future bullish stage and more sales revenue. They're at the 52-week low $10.11 and actually 52 at $2.79. So on average right now it's about $1.80, and then if you look at it, it's a low 10% higher than the average. So there's still some momentum to go, and hopefully this stock continue to be going well. The next one is another one I saying this is a little bit more risky. The higher the risk, the higher the return, and the stock actually you can see really big range of beta, which is the delta of risk and the change of prices. 52-week low is 25 cents and versus year high $3. And on my last video, I said it by about 80 cents. So right now it's still lower than that. I was losing some money even with the diluted prices I bought in. But I'm really looking at for those who are looking for short term and don't want to monitor this stock every day, all you need to do, just set up a limit sell position about 99 cents. And then really when when you have news or something driving it up, you will push it up. I don't see the next 3 days will have such a momentum to go up 30 cents, but I mean maybe potential next year, early next year will hit that prices, then you'll still be profit from this stock. This stock again has a lot of much higher volatility compared to other stock I talked about, but like at one point I was making pretty good money, so now I sell and buy back again at lower prices. Okay. The other one I really like, if you want to look at fundamentally much more solid and strong company, is Microsoft. So Microsoft, the next one I'm going to talk about, which is Alibaba, have identified some room for upswing. We're being upgraded by analysts. So the price around Microsoft's target to be $660, while Alibaba is target of $190. So you can see the prices actually about it probably about 480 something for those who will go back to listen to my video. So you actually have an uptick after I buy it at 400 something, and then you gone back up a bit. So I did make some money around the range of here at the beginning of December. That's just what I did. About 400 something. I sold about here. And then it's come back down again. So now I buy more back again, about $480 again. And I look forward to this stock will be here $500. I mean, Copilot is really an amazing thing. And even right now I'm talking about to you in this presentation, I'm using Windows, right, which is Microsoft based. Is very important. And then they have an Edge, which is another Internet Explorer, replacing Internet Explorer that you use to browsing the internet. So there's a lot of also the cloud base is very solid and strong. So if they spend a lot of money on AI infrastructuring, and if that materialize and give them more solid return, I mean this stock gonna be go higher than really definitely this level right now. Of course, 52 we know the precautions also $344. But so the potential upswing, but this one definitely. I mean, if you look at short-term capital gain, if you're gonna $500, you will probably can sell it. 5%, not too bad, but really anticipate not long, very short time you will hit that level. But you also potential can drop it way down to 400 below. But in the long run, this stock is a lot solid, and they actually make money, profitable. And if there's some catalyst that disgusting, right? If the corporate tax is going to drop, I mean, it's going to be these type of big corporation will be in very good benefit. So again, I look at this stock, yeah, really holding to back to $550 level. So that's why I bought it and recommend it to you. The other one, Alibaba, again, it have some fluctuation. For 1 month, you can see it's a high $164 and drop it back to really low $140 at one point. And really a year high $192. So this stock has a little bit more fluctuation due to geopolitical risk. But again, this is also have an AI platform, one of the strongest stock in China about AI development, and I mean along with Tencent. So I think this stock is really pretty good to buy for a long run for those who want to hold it. I think when I in the video I has talked about it. If you go back to the last video, I say $140 is an entrance point, which is pretty much around that range right here. So so right now should be probably bounce it back, and if we're going to fundamentally strong, which next year 2026 is a time in a decade the proving of AI. So the challenge of the U.S. economy, however, right now is with the GDP growth of 4%, it's just because of company just not hiring, even though they make a lot of money, they're making the job employment numbers suffering not so good. There are a lot of people already out of job for more than a year, but which is probably not picking up from the unemployment data. So it's quite disappointing that while corporation making good money and continue to be solid, they actually shrinking the employment, employment. But however, bear in mind that from a statistical standpoint, it's still very low historically comparing in the employment in unemployment rate in America. Also, and the inflation has kind of under control. So now 2.5 to 3%. So obviously the question though is, if you go to a dollar store and you can see things actually raise $1.25, which is 25% increase, do you really believe this average number, which gives you only 3% inflation? But again, I think the U.S. economy will be, really interesting to see if the AI materialize. There's some EV, continue growth in that market, and geopolitical risks, and also how it's going to happen in the, the One Beautiful Act. If everything going to be actually benefit from that materialize in 2026 with the corporate tax cut, those will be the catalysts that really drive the market with getting continued proven in the Wall Street that there's strong, solid earning from these corporations. Okay, then you will be good. The next thing I want to talk about is SamePaint, which is the stock I love. Again, remember during COVID, this stock at $75 high. So now it have a really good string if you want to do short-term trading on this stock, which you probably lately is around $19 to $22 range. It will give you some upset. Now, this is just 1 month view, but if you spread over 6 months, you still quite a bit of opportunity of like V shape, which gives you 10% return if you would take advantage of those short-term capital, just buying it, and then when you hit 10%, you sell. So I bought some of those for last time a video. For those who hear it, I buy about $19. Now it's a $20.78, and potentially if the last few days of momentum, hopefully will drive it, push it up to $22 again, which is another 10% upswing. Now this stock, however, they do a lot of innovative innovation about flying car, but it's not going to materialize at this point yet, and they do a lot of expansion of robotic development. So I mean, again, this is very this stock has a very potential future that we're talking about, and obviously the big competitor, one of the competitors, Tesla, with them, which Tesla stock have been doing pretty well lately too. So I'm expect this stock will have an uptick. The next thing I want to recommend is some opportunity there. So the retail market actually reporting, and so pretty not bad. So with the center cost value, the stock and retail stocks actually have rebound about 2 to 5% late in the last couple of days. So I'm looking forward to giving some opportunity for you for stock that have been actually going down significantly. So one example, I mean, you can look at Starbucks too. Starbucks is one of them that actually have some downtick, and now with the new CEO, looks like the strategy working a little bit well. The stock have quite coming back to $80 level. But Nike, as you can see, I mean, Michael Jordan, there was a big time for those who knows who Michael Jordan is in the basketball, era. You look at the stock, really historically strong is $140, and lately have been doing pretty bad. It's really gone down to $100 level in this year, but now it's even go down further, right? So 52 below is $52. I bought some at $54. So I immediately I get 5% return on this stock. But you look at P/E ratio, not too bad. 52 at $82. I think what they lack of is marketing, right? That they actually, again, in those video who people who heard about me, Nike sold quite a bit of shoes in China, Asian market. So China have been very domestically growth in quite a bit of develop their own brand of shoes, and basically not as shoes, but really in that space. So they find local actor and actress promoting their brand. So they did pretty well actually. So now that's just why Nike is suffering, because the Asian market, the sales have declined. So what they need to do is really no-brainer, right? Just like I told you, Netflix will split, and it split. So now we see what Netflix strategy going to be next, right? To drive the stock up again, because since it's split, the stock have been taken down like 10%, but obviously, maybe in the Christmas earning, when the next earning they say there are a lot of subscriber due to holiday, then the stock will actually uptick again. But so we have to be a little patient on that one. But this one, yes, all you need to do is just find another really good basketball player to brand their own brand, right? Brand development and recognition, and then once the basketball season open, I mean, there probably a lot of people could buy the shoes again, and they will be really going to the uptick again. I'm projecting this stock maybe a little bit patience, but overall you probably will go back to $80 with no problem at all. Next one, Under Armour. For people who would like to go to the gym, athletics, you probably realize a lot of people wearing Under Armour. So This stock again is really suffering because of the exit of a designer. It's really dropping down big time from $21 in 2022 all the way down here to $4, right? And so this is really a good opportunity for this kind of stock to look at. But I will look at this as next year U.S. economy maybe, again in very with layoffs, announced a layoff of major corporation, and really not many hiring going on. Things are going to get worse, so retail may be a big hit. So you may have your patience, but right now maybe is a good price to buy for long term of this stuff. All they need to do again, they just need to brand it in and buy and design, have some new design and breakthrough. Then this stock will go well in the long run. So those are the two right now I'm recommended to buy, but these will be more for long term, unless tomorrow they suddenly just jump up 5% because of no reason but momentum, right? Really market momentum. Then you can take a profit and walk. Otherwise, it will be a long term positioning. If I buy Nike at an Under Armour, which I did, I was just gonna hold them for a longer time, which is probably a year plus. The other next one is Apple. Apple have been really, compared to other Mega 7, have been really lagging. They were not doing very well. So the stock prices don't jump up as much as other big tech stock. But again, with holidays, so I actually recently got an Apple phone right now, and I haven't been using the phone for a while, so I don't even know the features and all the great stuff. Only thing very noticeable, however, is if I use the phone that I previously had with Apple take a picture, you can see a very noticeable difference. And again, Apple sell a lot their market share very quick in China, so you're really depending on the relationship and how things goes in the economy in China, because if people don't have money, right, and the economy is not doing that well in China, well then the sales in China definitely going to suffer in this company. But however, with the cloud business, which you have, sometimes money cannot buy your memory, so you're gonna save your photos and precious things into the cloud, which you have to do subscription every month on Apple. That's just a nice earning revenue from the stream, right? They also have they cut out the concept of Apple Car, but they are still continuing to develop. And right now, again, phone is every 1 year, and their Apple Watch and all this new innovation they're trying to push the market and continue to do marketing very well. I mean, this stock, like I said, I still target $300, no problem. So with all the retail, which is this is the last time talking about Pinduoduo, which is my favorite. The stock actually had come back down from $140 level down to $105 run at the low end here, as you can see. So this is a good opportunity stock to consider buying. Again, the geopolitical risk, which should be compensated. So this stock, when they go up, they normally will outbeat the market. So so this is another one that will be good to hold and consider all the Chinese among all the other Chinese stock. So so what investors need to do now is to focus on the strong fundamental with positive earning and growth stocks, right? So I did walk through a few of them: Apple, Microsoft. So those are the good ones that I will be holding them. And what investor also need to do, think about the valuation fluctuation in the market, just normal, right? But in the long run, right now, market analysts still looking really bullish in 2026, and stock consistently outperform with which higher, and obviously could have a dip, right? So that's why I always buy at a dip, sell at a high, and also in US, I mean the GDP growth is pretty healthy, so. And again, they're still looking at potential double-digit gains next year, and you just have to pick up hopefully you pick up the momentum over the next few days before end of year, finishing strong in 2025, and 2026 will be an interesting time to really testify in the AI infrastructures, how the EV market continue to penetrate in the overall globally, inflation watch to see how to control the inflation, how Fed is doing that. Employment data, like I said, if there are a lot of people out of job, then obviously the retail market will be significant impact. And while market remains volatile and can shift to different industry from side to side, analysts are still very look good at 2026 right now. So may you have a quick and wonderful new year. Happy 2026. Thank you very much.